Happy New Year, David. It's our first currency countdown for 2012. How are you today?
I'm well, thank you, Tracy.
Well, let's talk about what's happening with the euro. I'd like to start about the bonds and the impact from the collapse of the euro. Where do you want to begin?
It's a mixed bag. The overall conditions in euro, in my view, and many commentators, is it continues to deteriorate. And we're in a situation where you just cannot get this group of individual countries banded together for political purposes on an economic plane that is equal for everybody. It's impossible, and the markets are bearing that out. So, strength in one area, weakness in another, and that will continue. But it only takes, as the old adage goes, a chain is as strong as its weakest link. The weak links are several. You've got Spain, Italy, Greece, and others, Ireland. And they're basically in a depression, these countries, and there's all kinds of people literally in the streets. So even though France might look good today and Germany might look good, last week or so, and there's, all kinds of commentary about, resolution of the problem and the ECB coming to the rescue, in my view, it's a smokescreen. Things are deteriorating basically before our eyes.
Yes, let's talk about smoke screens, and in particular the impact on bank lending. I would suspect that's one of the examples of how this is affecting all of us. Can you talk to us about banks and their lending and how they're going to cope with all of this?
Well, that's the crux of the problem. The basic situation is extremely similar to what happened in the 2008 financial crisis in the United States. And to be specific and be crystal clear, what happened at that point was that interlending bank-to-bank loans were not being performed. What that means is that Bank A didn't trust Bank B, which didn't trust Bank C. Well, all these banks are interconnected, but none of them were trusting each other. And the whole system is based on confidence. So at the last minute, so to speak, and the Fed didn't waste any time, came in and said, okay, Bank A, B, C, D, what we'll do is we will eat your toxic paper and we will substitute treasury bills, treasury notes, treasury bonds for that paper, and trading continued because all these banks were willing to trade their toxic waste assets for government-backed paper, and the system did not fall over the cliff. We're in a similar situation in the euro. These interbank lending for all practical purposes has ended. These banks don't trust each other. You don't know what the loan rates are. You don't know what the discount rate is going to be. You don't know how much the interest rate will be pushed up. Basically, you just don't have any confidence in each other. However, you still have the ECB, the buyer of last resort, similar to the Federal Reserve in the United States. And so even though this oversubscription to the French last bond program, which is currently going on, I think that's more of a, again, smokescreen, meaning that, the powers that be are there saying, yeah, we want to buy these things. Yeah, you do. Well, fine. The real truth of the matter is that these banks are scared to death. They don't trust each other, and that further deteriorates the system. So I think we're getting near the end game here.
I want to talk about the Asian markets and how they've been impacted. It seems that the press is starting to see a correlation. What do you think?
Global markets have been global for some time. I mean, regardless of the different currencies, everybody is tied together. I mean, without, the exportability of China and the ability of the westernized nations, Europe as well, to be able to export, funny money to the producers, you're not going to have world trade. So we're all interconnected, and we're all connected to the US dollar, although that has been lagging of late, meaning more and more we're seeing Russia and China say we will trade with each other without going through the dollar first. It happened again recently with other countries in China. Some entities and nation states are going to use the yuan directly and peg some of their trades in the yuan without going to or pegging to the dollar. So you're seeing more and more undertones in the real world where trade will continue, but the dollar isn't used as a supreme currency, and that trend will continue.
Hitting the ground running in 2012, where I'm reading all kinds of documents and emails on the impact of reflation and how this is going to cause a beautiful boomerang in the resource sector. Can you tell me if you agree with that, or what everyone's talking about? Do you think you could define that a little better for our listeners?
I think I can help. I'll add to it. There's defaults are going on left and right. The depression is real in a lot of the European Union and especially in Eastern Europe. And I think the analogy, and even one of the leaders of one of the main banking sectors has used the word depression recently. What happens during these defaults is really one of two things. One, you default on the currency, as we've talked about, or two, you can default on your ability to pay back. And as we've discussed on Currency Countdown 3 weeks ago, when Greece was repositioned at about 50%, in other words, their bonds were subject to a 50% haircut. They're now worth half of what they were previously. That's a default or partial default on the bond itself. And the other way is that you default on the currency where it isn't trusted anymore. And that, I think, is the route that we're going to see come to the fore, especially in the United States. So what takes place is the currency becomes worth less, and finally it's worthless or perceived to be going to worthlessness. And at that point, there is a huge rush in anything tangible.
I want to ask you about gold and what's happening with gold right now and for the new year. Thought I'd throw this in.
Well, gold is the main barometer for economic health on a global basis. And we've had an 11-year run in gold for consistently 11 years in a row. The gold price has continued to increase year over year over year. I believe that trend is still in place. And I believe for 2012, we're going to get a new nominal high. If you take the inflation adjusted high of 850 January 21st, 1980, and you project it forward to today using government numbers, which are suspect in my view, you would come out with roughly $2,400 gold. I think you're going to see $2,400 gold by the end of 2012. And all that says is that it's back to its old time high in real terms. So in other words, 2,400 equals 850, again, using government numbers, which again is a bit suspect, but that's the case. And so then I think after that, we'll go up from there. Now, obviously, I'm making a forecast here and it could be off, but we'll see. I really do think that over the next 2 to 3 years, that as this unwinds further, meaning the global economies and this currency problem continues, you're going to see a huge flight into the precious metals, silver included. And a lot of people are going to wake up to the fact that be it Canada, be it the United States, be it South America or in Asia somewhere, that their savings are being deteriorated and you need to protect yourself. You need to get something of value that will hold value. And since the global economy is much more interconnected than ever before, and their access to precious metals is greater than it's ever been before, I think it's going to be the mother of all bull markets we're ever going to see in the precious metals. But we're not there yet, but we've certainly built the foundation to build upon to get to that place. So I look for huge increases in real purchasing power for gold and silver over the next few years.
David, thank you so much for joining me today on Currency Countdown.
Tracy, my pleasure. Thank you.